Hi, I'm Jeffrey Roach, Chief Economist for LPL Financial. In this Econ Market Minute, I'll give you 3 highlights of the past week and 3 potential market movers for the week ahead. So let's start with 3 highlights from this past week. First, let's flip the script. As it turns out, Federal Reserve monetary policy might not necessarily be the only factor underneath growth or recession prospects. Rather, U.S. consumers, particularly the upper income ones, might be the primary factor for the base case estimate that the U.S. gets a softish landing. To pad personal spending, consumers have savings, credit. We expect revolving credit demand to increase the latter half of this year. So as we move forward, we should focus on consumer behavior, especially during these times of higher food and energy prices. Second, food and energy prices do remain stubbornly high, kicking up headline inflation prices by 8.6% in May from a year ago. The core inflation metric, which strips out food and energy, decelerated to 6% year over year. But the big story continues to be the uptick in groceries and gas, especially hurting lower income households. Once supply chains and geopolitical tensions normalize, we think auto prices and food prices should both moderate. Third, let's take a look at the currency markets. A weak yen could increase the risk of starting a currency war with other heavy exporting countries. As long as the Bank of Japan remains committed to capping yields, the yen will still exhibit weakness. The yen is now trading close to its 24-year low. So how about 3 potential market movers as we preview the week ahead? First, watch where and when and how consumers spend their money in the retail sales report. This report gives us minimal services spending, just restaurants. Focuses most on goods spending, but either way, we get an initial read into consumer spending behavior and will set us up for what momentum looks like later this summer. Second, on Thursday, the Fed likely hikes target rates by 50 basis points. Even more importantly, the Fed will release the latest summary of economic projections. Watch the press conference carefully, since the chair will likely add color to their thought process about labor markets and about international risks. Given the messy CPI report, the odds of a 50 basis point hike in July by the Federal Reserve is looking more likely. But remember, the CPI does not go into the Fed matrix for policy. It's the core PCE deflator, which accounts for substitution effects in this important metric. Third, we'll get insightful leading indicators from the conference board later the week. We expect leading indicators in the month of May to suggest a slowdown in growth, not a recession. Business orders and shipments from the previous report show that Q2 economic growth should provide some momentum for the rest of this year. So that's all. See you next time for more economic insights for your week.